While Iran and the U.S. work toward peace, crude oil prices are falling again amid the frameworks of a possible deal.
Michael Yoshida has more now on the market move.
We've seen this pattern before, opening for diplomacy and oil prices drop. And while this latest pause is giving markets a chance to breathe, the real test is whether it will hold long enough to bring drivers some relief at the pump.
Oil prices tumbled Monday, and one of the biggest single-day drops since late May.
We're really experiencing kind of the oil market roller coaster ride of 2026.
For months, oil markets have used any sign of good news as a reason for prices to fall. Optimism that's kept crude oil prices from soaring. The recent ceasefire also helped, allowing hundreds of millions of barrels to escape the Strait of Hormuz. But shipping traffic has again slowed to a trickle, and the market's resilience may be starting to fade.
In the last couple of weeks, the fighting flared again. We saw oil prices above $100 a barrel last week, and that's an indication that inventories are becoming very tight, and the market has these concerns.
The big question now, if the conflict continues, how long can stockpiles keep demand low? China has been leaning on reserves built up before the war. The U.S. and other countries have tapped emergency supplies too.
We can keep it up for a matter of a few more months, but as those inventories drain, that means that the cushion for a future oil market supply disruption is very thin.
So if demand picks back up while supplies remain tight, drivers could be in for a rough end to the summer. As of Monday, AAA says regular gas averaged $4.11 a gallon nationwide, up 23 cents from a month ago, and more than $1 higher than before the war.
Americans probably, at least for now, may not see much of a drop in gasoline prices because while oil is dropping significantly, it's only the cost of oil dropping, whereas gasoline and diesel fuel not seeing much of a drop yet.
And experts say there's another wild card at play here as well. If the strait does reopen, any new toll payments could still impact supply and prices. That's because those additional costs, they could impact insurance and whether companies are even willing to send their ships through the strait. In Washington, I'm Michael Yoshida.